Last week, we saw the release of consumer sentiment, business sentiment and housing finance for Australia. There were no standout surprises, and as you can see from our first chart here, consumer sentiment remained positive and has been so for the last few months, driven mainly by a rate cut in August and steady interest rates over the months of September and October. Similarly, business conditions and confidence are also holding up, particularly in non-mining states. While housing finance showed a small decrease in owner-occupied loans, lending to investors continues to be resilient and residential building approvals firm, so expect lending for dwelling construction to remain solid. This data, along with other domestic economic indicators, offers a low probability of an RBA rate cut in November. The markets are now focusing their efforts on a rate rise in the US by December, which saw portfolio adjustments back into US dollar-denominated assets. The combined RBA and Fed market expectations on rates has seen a slight move up in Australian interest rates. The big market mover has been the British pound. It endured its worst performance since the EU referendum as investors grew alarmed at the prospect of a severe or hard Brexit from the EU. In fact, the UK government announced that GDP could fall by as much as 9.5% if it leaves the EU and reverts to World Trade Organisation rules. Heavy losses sent the sterling down more than 5%, and the Australian dollar against the pound reached a high of 64 pence, heights not seen since 2013. Meanwhile, commodity prices, including oil, continue their roller coaster ride. Oil prices, as shown by the West Texas crude chart, fell following 8-year highs in output production for the month of September. Then, prices went up on speculation that OPEC members would meet non-OPEC members to coordinate output cuts, only to then drop again on doubts Russia would be willing to cut production. This overall uncertainty has caused the Australian dollar, in particular against the US dollar, to trade towards 75 cents after struggling for several weeks to hold above 77 cents. Expect this volatility to continue whilst we have the US presidential election looming. Closer to home, China released this trade data which showed a fall in exports and imports over September, placing further pressure on the Australian dollar and the broader equity markets. I'll see you next week for the market update from Bendigo Bank.